Welcome traders, and in this video we're going to be looking at how to do a top-down analysis or looking at how to analyze a chart from top to bottom. So here I've opened up the Euro Pound chart, and to do a top-down analysis we like to start on the higher time frame, such as the monthly. So if we hop onto the month here, now we do this so that we can actually scale back and see all of the price data, so we can get a little bit of a better understanding on the largest trend and where the price is actually heading towards, what's happening with the trend, what's happening with the recent monthly candlesticks, and just a bigger picture analysis really. So on this time frame, what we can actually do is plot on, or we can allocate ourselves 2 to 3 key levels depending on the analysis. So let's have a look at the trend to begin with. Now the trend, if we look as a bigger picture, we can see that we are kind of moving sideways in terms of looking at trend. Now we have here been in an uptrend here, so higher highs, higher lows, higher highs, higher lows, higher highs. But ever since then, we've kind of moved sideways. We printed a low here, a high, a lower low, a higher high. So there's no real visual trend going on as such, sort of from 2017, but the moving averages are pointing towards the downside, and the recent candlesticks have been bearish on the monthly time frame. So in terms of actually placing on key levels of support and resistance, I'm going to use the bodies here of the bottom, so around here, double click, and we can probably go for 0.8400 as monthly support. So again, going to double click that and analyze that as monthly support, and monthly support because it's below the current market price. And then as for the monthly resistance, we're going to use we're going to use this here. 0.9200, and that's going to be monthly resistance. So we label them so that we can actually, when we do go down a time frame, we can still see them visually on the left hand side there, so we can just locate, and understand what that level is, because it can get quite confusing sometimes when you're looking at a lower time frame. You may see a line appear at the bottom of your screen, you don't quite know what it is, but obviously if it's monthly support, we can see what the price is. It's all rounded off, it's key level, psychological key level, then it's only going to help improve our chances of actually winning. So other than that, here on the monthly, I can't really see a lot else going on. Obviously I've analyze the recent candlesticks, so now we need to drop down to the daily. So once we drop down to the daily, let's get a little bit more detail about what's going on a short term sort of time frame. So here we can see a little bit more of a downtrend here, lower low, just about lower high, lower low, potential lower high. So here I'm going to play about with allocate myself, up to 2 more maximum of lines of key levels, and then also potentially look at Fibonacci trends, more to do with where the overall momentum flow is heading, because on the weekly, again, we're still looking at high time frames, so we need to look at the bigger picture analysis and understand where the price is heading towards in terms of looking for a destination or a target, because that's what we want to be looking for out of this time frame. It's not so much the entries, more about the destinations and the targets, which are essentially more important when it comes to finding your trade setup. Okay, so if we look at potential sort of trends then, so you can see here the prior high, lower high, lower low, lower high. If I have a little play around, if I use the very last significant lower high and I measure that all the way down to the low, we can see that would line up with the 38.2 as a C retracement here. We've pinned off that level quite well, and we have been pushed towards the downside now. So there is a potential downside target here, which we can mark in. If I go Alt H, that'll bring us a level. Again, round it off. 300 there. Yep, that'll do. 0.8300 as a potential downside target. Again, you can label this as a daily fib extension target. To keep the analysis clean, precise, simple. We can then get rid of the Fibonacci just to make things even more cleaner. So we've obviously got a little bit of support at the bottom here. Here I'm not really too fussed on keeping it super neat, but it does line up with 0.85, which is super psychological, so we'll leave that there as a horizontal red. And then as for key level, we can place on a daily key level at here. This here is quite significant in terms of looking at the prior support and upturn resistance, which is super psychological, 0.8700. We've pinned off that level, we've come down. As I said, if we break this lows now, we're going to definitely go into the Fibonacci extension levels, the support, monthly support. Overall, just take the level out to the downside if we do continue to press towards the downside. Now that's enough really said on the daily, but I'll have a quick look at the moving averages are pointing down, which is nice to see as well, going in a combination, building up the confluences in alignment with our overall analysis to the downside here. So at the moment I've got a bearish bias, so let's see what when we drop down now, what other things we see. So let's go to the more intraday time frame, such as a 4 hour now. So we go to the 4 hour. This is the kind of time frame where we're going to be looking for entries now. So we've got already got our destinations, our targets. The most important part of our analysis is identifying the exit point where we're actually going to get off the trainer. So if you don't have this, then obviously you just trade in no man's land. You won't know when to get out of the trade, and then the market is really going to mess you up in terms of emotional factors. That basically, when you're staring at a MetaTrader, obviously you're not going to know what's what. So the fact that when traders have exit points and exit strategies, that's way more important than getting into the market. Because getting into the market, it comes down to where you're placing your stop loss, etc. But here, so there's this clear area of minor support on the 4 hour. If I just put a horizontal box here, so yeah, I mean a breaker below that probably retest continuation. As long as you get a confirmation closes, I think that this is a great opportunity to potentially sell and short the euro pound all the way down to the monthly support and all the way down to the daily Fibonacci extension. So that's that really. I mean, you can use Fibonacci again on the monthly time frames, weekly time frames, if you did want to get a little bit more clarity on a certain trend. But as for the 4 hour, we don't really want to go too heavy on technical analysis side of things. You can use Fibonacci if you wanted to get more calculated and accurate entry. Stop losses I'd be putting above here, or potentially quite high up here. I mean, if the price was to come up and start attacking these levels to the upside, then potentially we could break out to the upside. So we don't want to get involved with any significant loss there. But again, there'd be great risk to reward even if we was to go 15 pips above. But we do want to keep it fairly tight most of the time when we are looking at stops, and then just trade them towards our targets. As I said, I don't like to go too heavily on the 4 hour or the 1 hour. Sometimes I do drop to the 1 hour just to get a little bit more clarity in what's actually happening on a more intraday basis, on a hourly basis, see what's happening throughout the day. We might perhaps look up on the morning and on the evening. So the hourly does provide me with some kind of statistics on what's going on in the day on a daily basis. So that's it for the this video. I mean, I've covered the overall charting basics when it comes to breaking down a chart and understanding, you know, what you need to really be applying. My charts are never too messy. I never put too many indicators on. No crazy amount of lines, trend lines. So it's important to keep the chart hygiene clean and understand where the prices are going, where the momentum's heading, where the daily and the weekly trends are taking place, and then input your trades in and around that. And when you can see, you know, opportunities to get into the market. For just quickly for targets, I would recommend anyone placing target. Let's say this Fibonacci D extension down the bottom is a target. We would need 3 confluences for a target. So number 1 being it's a prior daily Fibonacci. Number 2, look left, it's prior support, huge confluence. And number 3, perhaps, you know, I'm not going to go into too much analytical detail here, and obviously do your own research, don't just use this as gospel, but perhaps there's a breakout, and upon the breakout it's a significant it's a similar leg from the prior price movement, and then you can add that downside, potentially the 3rd confluence. So that would sufficiently you know, make this a viable target to the downside. So really it's all about how you combine all your tools, use all the confluences, and then ultimately get your targets and destinations for your trades. Technical analysis, I mean, within a year you can pretty much get to grips with a lot of the tools and how to actually move things around and put the pieces together in order to identify where the chart's going. The biggest part really when it comes to trading is your emotional aspects and risk management. You do those 2 correctly, it doesn't really matter what happens with technical analysis, because obviously you're going to be at a point in your trading career where, you know, losses aren't going to affect you, so then you can understand on you know, mass quantity trading, understanding your profitability over time. But adding, you know, technical factors into play can improve your profitability over time as well. So, you know, it's about how we balance all those 3 aspects of trading in order to be a perfect trader. So that's it for this video. Hope you've all enjoyed the video, and stay tuned for more blogs to come. Cheers.